A silent revolution is sweeping across the United States at this very moment. And if you are an investor, a property owner, or anyone trying to decode the logic of today's real estate market, you need to understand this right now. While the federal government seems paralyzed, asleep at the wheel in the face of a technology moving at the speed of light, states like California, New York, and Connecticut have decided they will no longer wait. They are, at this minute, rewriting the rules of the game and dismantling the very foundations of how property prices and rents have been set for the last decade. What is at stake is not just a bureaucratic shift, it is the end of the era of automated pricing as we know it. If you don't understand the legal implications of this shift, your entire investment strategy might be about to transform from a wealth-building machine into a multi-million-dollar legal liability. To understand the scale of the abyss opening beneath our feet, we have to look at what I call the secret collusion of algorithms. For years, banks, major developers, and property management giants have operated under a cloak of technological efficiency. They've hired third-party software companies promising to optimize returns and streamline yields. But what no one told you is that these software tools have created an invisible web of price fixing. Imagine you and all your competitors in a single neighborhood are using the same AI-driven tool to decide what to charge for rent. The algorithm looks at everyone's data, crosses information that isn't even public, and essentially whispers, everyone should raise their prices by 12%. There was no secret meeting in a smoke-filled basement. There was no incriminating paper trail or exchange of emails. But in practice, the result is identical. The market was manipulated. This is the nightmare of tacit collusion. You, the investor, are led to believe you're just following market trends, but in reality, you're trapped in a system that keeps prices artificially high, bleeding the tenant dry, and now placing your own neck on the regulatory guillotine. The great farce sustaining the modern real estate market is the belief that our current antitrust laws are enough to protect us. The Sherman Act, the cornerstone of American justice for over a century, has become a dinosaur trying to hunt drones. Under federal law, for a price-fixing conspiracy to be a crime, you have to prove an explicit agreement. Justice looks for the handshake, the definitive proof that two humans conspired to cheat the public. But what happens when the agreement is made by a line of code? What happens when a software tool licensed by thousands of competing landlords decides on its own that the best strategy for collective profit is to keep units vacant to force an artificial scarcity and drive up rents across the board? The federal system is broken, incapable of prosecuting a crime where the culprit doesn't have a social security number, but rather an IP address. While this loophole existed, large corporations raked in billions. But that era of impunity has just hit a wall. The state-level counterattack has begun, and it is brutal. California, New York, and Connecticut grew tired of waiting for Washington, D.C. to act and decided to slice through the supposed freedom of large corporations. California, through Assembly Bill 325, took the most radical step. They simply lowered the standard of proof. They threw out the Twombly standard, a federal Supreme Court doctrine that required complex, specific evidence just to start a lawsuit. Now, in California, it only has to be plausible that a conspiracy via algorithm exists for you to be dragged into court. If you use a common algorithm that utilizes competitor data to influence a price or a commercial term, you are already in the crosshairs. They no longer need to prove you spoke to your neighbor. The mere fact that you both use the same contaminated tool makes you a suspect. This is a total inversion of power and leaves the traditional investor completely exposed. In New York and Connecticut, the focus is surgical, the residential rental market. They are making it illegal to use any revenue management device that performs a coordinating function using non-public competitor data. Think about the gravity of this for a moment. The very pricing strategy your high-priced consultancy sold you as state-of-the-art tech is now being classified as a criminal price-fixing scheme. Connecticut went even further, explicitly stating that using non-public data to decide whether to leave a unit vacant, a common tactic used to manipulate supply, is a direct violation of the law. We're talking about corporate fines reaching $6 million and individual penalties up to $1 million per violation, along with the threat of 3 years in prison. A new era of compliance has been born, and it brings risks that could decimate entire real estate portfolios overnight. This is the grand secret that banks, developers, and rental platforms do not want you to know, and this is where your business structure begins to crumble. Your profitability might be built on a foundation of algorithmic illegality. What was sold as market intelligence yesterday is now viewed by regulators as a weapon for destroying competition. The price stabilization that has always benefited real estate giants by eliminating volatility and ensuring predictable returns is under heavy fire. The legal earthquake approaching won't just hit the software developers, it will bury the investor who delegated their ethics and their strategy to a digital black box. The real estate market as we know it is being deconstructed, layer by layer. The promise that technology would bring more transparency and efficiency is proven in many cases to be a tool for large-scale price control. Your investments are facing a risk that doesn't appear on any Excel spreadsheet, the risk of legal obsolescence. If your exit strategy or your cash flow depends on an algorithm that is now prohibited in 3 of the most influential states in the country, you don't have an investment, you have a ticking bomb. The brute truth is that the fair market price was never decided by a free market, but by equations designed to maximize the profit of the few at the expense of the many. Now that the veil has been torn, the question is, will you continue to blindly trust the system that traps you, or will you reevaluate your strategy before the judge's gavel falls? The future of real estate investing no longer belongs to those with the best algorithm, but to those with the best understanding of this new legal reality. Make no mistake, algorithmic pricing has transitioned from a competitive advantage into the single greatest liability in your portfolio. What happens in California and New York today will be in your backyard tomorrow. The system of software-driven price control is dying, and those who do not adapt will be the next to be deconstructed by the market itself. See what no one else has the courage to tell you. The real estate market is changing forever, and the algorithm you thought would make you rich might be the very thing that leads you to ruin. Understand how algorithmic pricing has become a terminal legal risk for your business. The era of digital collusion is over. Are you ready for what comes next? Subscribe to Housing Deconstructed and start seeing the numbers for what they really are.